Okay, it's the 26th of September 2024, and we're about 15 plus minutes to the New York Open. So let's get into the charts, do analysis as usual. Okay, so we are on the daily time frame here, and again the daily candles are just pushing up. So today, so what's happened is what happened yesterday and what's happening today is very similar to what happened a couple of days ago. You had a small candle close here, a small bullish candle close here, and then you had a big push up. You have a again you have a doji just above 2650. It touched 2650, and again we're pushing up, right? So the next stop is 2700, and then if you close above 2700, the next stop is 2750. So we just continue up. There is nothing to the left, obviously. Price has never been at these highs, ever, right, in the history of gold. When we reached 2600, I think last week we reached 2600, yeah, at the beginning of last week. That was the first time gold has ever been to 2600 in the history of gold. It's never traded at 2600 pounds. So now we're just heading higher. Now the next stop is 2700, and then if you close above that, the next stop is 2750. The reason for the push up like this is there's no obstacle on the left. There's nothing on the left, no price action. There is nothing on the left to stop price, to pause price. So price can pause wherever it wants. It can pause here, it can go up, pause here, it can pause in the middle here, it can pause there. We don't know. It's just I hate these conditions. I hate because there is no information on the left to uh, to base anything on, right? It's just price can do anything. Price can drop 500 pips right now, for no reason, because there's nothing on the left. It can do whatever it wants to, right? All we can do is look for a low risk, high reward, high probability trade from a high liquidity zone, right? And those are the H4 zones that we're going to take a look at. Now, as I've said several times, I don't really care about the daily time frame, the weekly or the monthly, any of these time frames for session trading. It makes no sense. I don't really care about the bias. I don't care about daily bias. I don't care about any of that for session trading, right? If you're trading just a session, if you're trading the first 2 to 3 hours of a session, and that's all you're trading, then there's no need to be worried about or concerned about what the daily time frame is doing, right? Uh, it doesn't take a lot of knowledge to look at the chart here and say that we're bullish, right? On the daily, we're bullish. On the monthly, weekly, daily, 4 hours, and even on the 1 hour, we're all bullish, right? So if you go down the time frames, you can see just price is moving up. That's it, right? So there is no guessing here. So so all we're going to do is we're going to try to look for a buy opportunity, obviously, and let's go to our trading chart and then draw our zones. Yeah. So these are. Let me just zoom in. Yeah, these are the the levels that we had yesterday. So if you watch yesterday's stream, we had put this line in 2,66671, and price touched it and dropped about 160, 170, 165 pips right to 2650. Right, we had put it there, and the stop loss was above there. I think it was about, yeah, about a 12 pip, 10 pip stop loss, and it dropped right here, right? That was the entry. And if you look at yesterday's stream, you will see why that green line was where it was. I unfortunately couldn't take that trade or capitalize on the trade because it was I had kind of ended the session and closed the chart when the move happened. So I was not able to capitalize on that trade, unfortunately. But if you go down to I'll very quickly show you why that green line was where it is. It was because of um, yeah, go down to the M1, right? It was because of that, right? It was at that supply zone, drop, base drop, 26671. We put the green line there. We put one above here as well. Price didn't come to that, it just came to this, and then we put the red line where the stop loss should be. So stop loss was at the second red line there, so that's about 10 pips, 11 pips at the most, and it dropped 165 pips. Now I didn't take that trade. I wasn't here to be able to capitalize on the trade. I had taken one, but when price went deep, I kind of managed risk and I got out of that trade, but then price just fell after that. Okay, and I was under the chart when the drop happened. And this the reason, again, I just want to summarize or recap why this green line was here. Yes, it was on the 1 minute, but more important than this 1 minute supply zone, it was part of this bearish volume candle, which is visible on the M5 time frame, right? This big move, it was part of that M5 candle or that M15 candle. More importantly, the M15 candle. It was a part of that. That was the volume that previously took price down. There was, selling volume there or bearish volume in that candle. And inside that candle, we found a M5 or M1 kind of supply zone that we took the potential trade was there, and then it dropped. Okay. So now let's clean up the chart and let's start the process all over again. Let's get rid of all of that. Okay. Price is there. We're going to get rid of that. Get rid of that. Okay. So I'm keeping all this information here because we're going to reuse this on the chart. Okay. So let's look at what we've got. We've got absolutely no supply on the H4 time frame, right? Even if you go down to the H1, there is nothing. So that's it. So if I look at the H4, there is no supply. There is nothing that even looks like, remotely looks like supply. That's to the left or above price. There is nothing. So no supply, right? So let's go to demand. Here we have a zone here. Let's get rid of that. Okay, we've got a zone there, right there. Okay. That is part of all of this big base. Okay, so if you wanted to consider it, if you wanted to look at it in a more of a macro level, you'd have a rally, and then all of those are basin candles. So 1 2 3 4 5 6 7 8 9, there are 9 basin candles, and then a rally, base, rally, right? Or a leg in, base, and a leg out, and we're still moving here. Okay, so that's the leg out candle, and we're still moving. Now in that we might need to clean that up a little bit. So here is better because that's cleaner, right? And we did take out this. So let's look at the high liquidity zones later. Right now we just want to kind of figure out where demand is. There is demand just below here as well because there's a drop and a rally, so we're going to mark that as well. And then there is a drop and a rally there, like a drop and a base and a rally. Okay, so we're going to mark that as well. Okay, we're going to clean all of these up, but for now we're going to just mark them like this, the way we see them. Okay, and that's about 300 pips from current price. Now keep in mind, today we have news. So we've got so today we've got unemployment claims. Okay, got unemployment claims today. Sorry, just give me a second. Yeah. Right. So today we've got unemployment claims. So that might move price a bit. Not too much, but it might move price a bit. Okay, we're going to just keep an eye on that. Okay, so maybe we just have this zone at the bottom also marked out, just because there's news today. So we have a rally and a base and a rally. Okay, so that's a good 500 pips on current price. That should be sufficient. Now let's look at cleaning up this. Let's go to the, that should be fine, but let's just go down to the H1. Let's get rid of that. So price did come into, did we tap this open? 701, low 710. No, we did not tap this open price. So 701 and 544. Okay, so there is demand there, and there was demand there that got tapped into there, but that was part of, I remember, of an H1 zone. Yeah, this one here. So we're going to use that, and that low is 544. So that low is 989. Yeah, we had done this yesterday. We had used the same zone, and price came yesterday. It came exactly to that zone. It also came to the 2650 level. We said this kind of yesterday. We were anticipating this move here. So if you watch yesterday's stream, um, you'll notice at the beginning of the session we were anticipating price to come deep to this area around 26, very close to 2650 or to 2650, but at the start of New York Open, but it didn't. It did it much later in the day. One, so one other, 5 hours after New York Open, it did it. So towards the latter half of the New York session is when it did come to 2650 and then reacted and moved up. So this was outside my, it was outside my trading hours, so I couldn't make use of that trade either. Unfortunate. Anyway, that happens. Because I don't sit at the charts all day. I just have a 2 to 3 hour window, about 2.5 hours, and then that's about it. I don't stay any longer at the charts. 701, 544. We put that in, right? Yeah. And now this one is 150710. 0710. Okay. And this one is 554342. 54342. Okay. that's the demand that we have. Let's get rid of that. Okay, so these are all H4 zones. Okay, all of them are H4 zones. Now we're going to see which of them are high liquidity zones and which are not. Okay, so there was supply here, right? So there was supply right there. We had marked this yesterday. We had marked this yesterday. We had marked it off the 30-minute time frame exactly here, like that. And there was supply there, and there was supply there. And this zone here took out that supply and that supply both. So this becomes a high liquidity zone, right? This first H4 demand zone here becomes a high liquidity zone, right? Because it took out that supply there, plus there was supply there. It took both of them out with this one move, with this one candle, right? So that high was 0.52 and this high was 0.55. Yeah, so that one candle took out that high and that high. So that becomes a high liquidity zone. Now we look for the one below it. If that's a high liquidity zone, the one here, price hasn't touched that yet. So on the H4 time frame, this is how I would draw it, because there is no base, there is a drop, and then there's a rally. So okay, so it's almost like H4 support. That's where I would draw the H4 demand zone. And so I have to go down to the H1 time frame to see if it took out anything to the left. Yes, it did. It took out this. It took out this, right? So there was supply here. Again, let's just get rid of that. So there was supply there, right? Rally, base, drop, and this move here that started with this candle went up, pulled back, took that out before this H4 was before this zone was created, right? Took that out, right? Because this was the 8. Yeah, this candle started creating this zone started forming. The H4 candle here started forming at 9 0900 on my server time, right? So that's the start of this H4 candle here, 0900. Okay, so that was the move that took out those. But before this candle took out these things on the left, this one here, right? So this candle was a part of this move, this rally up. So this becomes a high liquidity zone 2. I hope you guys are understanding now how I mark these high liquidity zones. I've done several of them over all of these streams, so it should be pretty clear. And now we have this zone here at the bottom. Did that take out anything? So we'll probably go down to the H1 because it's very ugly on the H4, and that's that zone, and that didn't take out anything. We pushed up here, came back down here. So this didn't take out anything on the left. So there's nothing on the left. There's no information on the left, right? There's nothing on the left. Absolutely no information on the left. Okay, there's no information here on the left that this zone took out anything. So this zone didn't take out anything, so that's not a high liquidity zone. Okay. Did this take out something on the left? Yeah, it took out those highs. If you go down to the H1, you will see a supply zone, so that's also a high liquidity zone. We did all of these every day of this week, so you can go back and watch these streams. All of these zones are marked exactly. These zones are marked here. This was also already marked before. Yesterday's stream it was marked, so we did these high liquidity zones over and over again. You can go check, watch the streams and learn how it's done. Okay, so that's what we have for the NY session, right? Um, okay, that's the H4 time frame. That's what we've got. Just post this on the group. Right. So on the daily, we've rejected 2650. Okay, previous daily rejected 2650 with 2700 inside, right? Um, no supply zones above current price. No H4, H1 supply zones above current price, and there are no daily SR close to current price. Okay. So if we go here, waiting for a pullback, if we can get a pullback, right? I don't know. News might give us that pullback. NY opened about 6-7 minutes ago, but we're going to wait for news. We're not going to do anything. We're going to just wait for news before we decide to do anything here. We're going to wait for news. We're going to see what news does. If news is going to just continue to push up, if news continues to push up, then we've got nothing. Then we just wait for price probably to head to 2,700, right? Because I'm not one for just jumping um, into into a trade. I don't chase price. I don't take breakouts. I don't chase price. I don't do either of that. I never chase price and I never take breakouts. I'm not a breakout trader. I'm a pullback trader. So I wait for price to come to a level that I have marked previously on the chart. That's it. Simple. If price comes there, I'll look for an opportunity. If it doesn't come there, fine. I'll come back, do the same thing again, right? That's what I've been doing now. I've done about this is the 12th, I think the 12th stream we're doing. If you watch the last 11, you'll see that that's the exact same thing that I've done, right? Sometimes price comes to my level, sometimes it doesn't. Um, and if it doesn't, then that's fine. Um, okay, now we wait. We wait for um, we wait for price to come to these levels if it does today, right? If news brings it here, great. Um, yeah. Okay, so this was the daily open right here. This candle. This was the daily open. This was the Asian low right here. That was the Asian low. Sorry. Um, yeah. This was the Asian low. and then 4, 5, 6. This was the Asian high. Asian low, Asian high. Nothing, just 60 pips, right? Didn't do anything in the Asian session. Then this was the London low, right? And that's the London high. Okay. So in the London session, we moved 126 pips, 125 pips, great. Asian sessions just 60 pips, and in the London session, we moved about 125 pips, right? This is just to understand what price has done so far. So Asian session did nothing, there was no volume, but in the London session, we had volume, and price moved uh, this much. Now, price did not come to this zone for liquidity. Uh, Let me just recheck that. It did on the H1, yeah, it did. This candle grabbed liquidity from this zone. So on the H1, this zone would be drawn like this, right? It did tap into it. So we're going to pay attention to that candle, okay, like we usually do. We're going to pay attention to that candle. So we're going to kind of mark that candle out. This is what I usually do here. 146, 803. 46. Okay. To mark that wick out, that liquidity wick, because it grabbed liquidity from this, yeah, from here, from this high liquidity zone. Okay. If you draw it based on the H1, this zone went up here, took out this high. Okay. This was the move up. I took out this high. After it took out the high, so let me just explain this better. It took out that high, right? This is supply, rally, base. I drew this before. I've drawn this before. Let me just do it again so that I don't want anybody to miss this. It is not complicated at all. It's fairly simple. It is very simple. Okay, this is part of what I already explained. Rally, base, drop. This zone here went up, took that out. That is why this zone becomes a high liquidity zone. London came and tapped back into that zone. So this liquidity wick is very important because it grabbed liquidity from this high liquidity zone. I hope I made myself clear. Okay, again, rally, base, drop. So a part of the rally base drop is obviously this high, right? That's the high of the supply zone. Right, so there's H1 supply zone there. Okay, it's visible even on the H4. Price came down, made a drop, base rally, so that is a demand zone now, H4 demand zone, and took out that supply zone, making this demand zone a high liquidity demand zone. In the London session, we came back to that demand zone, grabbed liquidity from it, and we moved up, right? So once we grab liquidity, we moved up. Let's take it from here, maybe from the start of that base. We've moved up 270 pips, right? So that wick is important. I'm going to pay attention to that wick. Now let's just go back and readjust this. 5701, 7.01. Okay, let's get rid of that. Let's get rid of that. Okay, so that area is important for price, to see if price can come there. We are not too far. We're about 140 pips away. I don't know whether we will come down there, but let's see. If we come down there, we're going to maybe pay attention to it. We're not going to place any orders or anything. I'm going to just wait pay attention to that area, what price does if we get to that area. Okay, so that light green box is part of this big green box. The wick is visible only, the liquidity wick is visible only on the M30. It's not visible on the M15. I would have loved to see it on the M15, or I would like to have seen this candle be a bullish engulfing candle, but it's not. That is a bullish engulfing candle. That has a bigger wick. That has a bigger wick. Yeah, let's 12 minutes to news. This is 9:15. Two lows taken out. That low was taken out by that candle. This low was taken out by this candle. And price came back, touched the mid of the fib and went up. Okay. Right. So the low is 803, high 162, 162,803. Okay. Now where did it come to inside that? Did it? Yeah, so it came when it did come back. So this came back here at 10:15 server time. Okay, 10:15 server time. So if you go down to the 1 minute, if you go down to the 1 minute, it came to this demand zone, drop, base, rally. It came exactly to that candle, right? And then it went up. But we haven't come to this drop, base, rally. We haven't come here yet. So yeah, that's an area I'd probably pay attention to. Close 873. 873. And it's maybe clear on the M5. No, no. Nine double three. Yeah. Anywhere in this area is good. It'll have about a 15 to 18 pip stop loss. Anywhere in this area is good. Obviously, the lower we get, the better. If we come there, but let's see if price does make it down. Yeah, I'm going to pay attention to that area. Okay, we've got about 8 minutes to news. So they're expecting bad numbers. The forecast is higher than what than the previous that than the last report. Um, the last report was, I think, last week. Yeah, it's kind of every week. Yeah, the last report was last week, so they're expecting bad numbers. So it doesn't really matter. Price is very bullish on the higher time frame. So all we need to know is if price is going to come to our area of interest, um, come somewhere here or further down here to this high liquidity zone, or even down here to this area. But I don't know. I don't think price is going to come down to 150 pips. Maybe another 150 pips, maybe 150, 175, maybe, but maybe not lower than that. So we got to wait for news. Got to wait for news. So price might just push up. We might have bad news, and price might just push up 200 pips and go hit 2,700. That's possible too. That's very possible. Um, yeah, because we've broken one low here. If this candle breaks this low, this current candle before it closes in the next 5.5 minutes, if it breaks this low, then the next candle can just push up. That's very possible for the next candle to push up. Um, but we're gonna wait for news. We're not gonna do anything right now. We're gonna wait for news. Yeah. So if this candle doesn't break this low, then yeah. So if this candle doesn't break this low, this current candle, it's got about 2 minutes, a little over 2.5 minutes for the candle to close. If it doesn't break this low, then the next one is very likely to come straight down. What I usually don't do this, but I might just take a very small position here, a sell trade here, just right here, very small, 37. Yeah, I might just take a 1 and 58. Yeah, I don't usually do this. Um, sorry. Sorry. 嗯 Okay, a minute. So 84. Yeah. Hmm. Let's see what news does. Stop loss is there. Very small, two positions. If you get stopped out, it's fine. Taking a very, very low risk. See if you get, if price comes up here, gets his entry and then goes down. Or just drop straight through. Might just drop. Might just drop. Yeah, it's dropping. Yeah. It's not pulling back, it's just dropping. It should come here. Price should come here. Come down. It just didn't. Um, yeah, it's unfortunate. Didn't there was no price didn't pull up here before it comes. It should. If this 5-minute candle closes here, then we're just the next candle is just going to continue down. Yeah, I was anticipating price to pull up and then go down, but it didn't. It'll come here and then it should come down here. It's about 125 pip move. It's, there's no chance to get it. Didn't pull up. We're dropping. It should continue down to maybe here. That's a 130, 140 pip move down. All the way down, 140 pips. I would have, this is too much of a stop loss, 70 odd pips. Here was 30 pips, okay, that's fine. 30, 20 pips is fine, but this is just way too much. Yeah, it's unfortunate. But now, as you can see, there's a flat top here, and I've said this several times. When there's a flat top, now prices, once it comes down, wherever it comes down to, it's going to collect liquidity, go up, take out that top, and then continue higher. So that might take a while. It's not going to happen right now. It might take a while, but that's a move that we can anticipate. That a move that I can anticipate and wait for a trade. Hopefully, we come down to this area. Yeah, this was the open of the candle. Price had just broken above this high, gone up there 17 pips, and then come down. Would have been brilliant. But we're coming down. We should first we'll have a reaction here 267060, and then if we close below 267060, M5 candle closes below that. Um, yeah, so there is resistance there. So if let me show you, I do this. I do this every day. I draw support resistance as well, so that those who don't know how to draw it can learn how to draw it correctly. So there is resistance there. Once candle closes below 267060, then we come down to 266,520. But a candle needs to close below that. So let me just put the values there. High 235, open 7012. High 7052, 72, 7052, 7012. Okay. So if you go down to the M30 also, you can see there is resistance there. If you go down to the H1, you can see there is resistance there. So if you draw them correctly, you should see them on at least 3 consecutive time frames. And just like I said, price came down, tapped 267060. Okay, we're almost there. We're just 2 pips away, right? We touch. So if a 5-minute or a 15-minute candle closes below this, then we continue down to 2665. That's the next resistance area. That also, let me just draw that as well. Just go a little bit far left here. So right there. Mm. Oh, 476, 476. Yeah, roughly about there. That's the 559. 559. This is just creating a bottom wick for the next candle to trade through. Because we've got a bit of bearish volume now, so we should just we're just pulling back a little bit for the next candle to pull back and then trade through this range. All right, so there is resistance there, or there is support there for here for this SR level there, and SR level here, and they're exactly at these fib levels: 267060, 266521. Right, that is, yeah, that is correct. Yeah, roughly there. Let me just redraw this. Yeah, that's better. High 439, open 436, 559. Okay. Yeah. So now we are, as I said, we're pushing through. It's unfortunate we didn't get up. Let's just delete these pending orders. No point holding them. Price, I was anticipating price to push up there, get entry, and then fall, but it didn't. There's a lot of bearish volume, so we're pushing right through. Yeah, we touched this and we broke through 267060. So we should, if we close below this now that's the key. Candles have to close below this. If a candle close below this, we're coming further down, right? Seems like we are. We need at least a 5-minute candle to close below. Yeah, so this candle is just about to close. We either close exactly at the support inside the gray area, or we close below it. Then the next candle wicks up and continues down to this one. So as I said, here, if you look on the 30-minute time frame, you see the resistance. If you go to the H1 time frame, you see the SR level here perfectly. You see how price couldn't close above, was below, reached and went down. Onto the left, exactly same thing happened. Tapped, went down, closed above, closed back below, went down. Here also it reacted here. And if you go down to the M30, you'll see the same thing. If you go down to the M15, you'll see the exact same thing, how price reacted to this level. So we're expecting price to come. If we do close down here, a 5-minute candle closes down this, then we're coming down here. 5 or 15 minutes, doesn't matter. 5 of any time frame. 5 or 15 closes below here, we're coming down. The reason I say 5 is because this is high volume hours, right? I've said this, there is a difference between high volume time and dead volume time. This is high volume time. So the 5-minute candle did close below. It closed exactly at the support. So we said either at the support or below it. So it closed at the support. So now the next candle should push through and come down here. But we need a top wick first. So maybe we create a top wick and then we come down. So this was the opportunity, but there was no pullback up here to come down. But this was a perfect pre-NY trade because we were breaking highs. So we broke 2 consecutive highs. This candle broke this high, this candle broke this high. Okay, so this candle broke here, this high, and this candle broke this high, went up, and then you draw your fib based on that candle because that has a big wick, a liquidity wick. It's pushing price down. Draw there, and price respected the high of this candle, touched the sniper during the NY session and came down. Now the reason I didn't take this trade at the New York Open is because this is not happening at an area of interest. Area of interest are these areas that I mark, where I call them high liquidity zones. Those are my areas of interest, high liquidity zones, or these green boxes, H4 demand, H4 supply, right? Those are the zones. Here there is nothing to the left. If there was something to the left, I would have definitely taken this trade, but there's nothing to the left. So the reason I kind of I was looking to take this trade during news was because I was anticipating the move down, right? Price hadn't broken this low. So if it hadn't broken the low, if this candle had broken the low, then no. but this price hadn't broken this low. So because it hadn't, the next candle I was expecting to come back exactly to 267060, and that's where it did. Now we're reacting to 267060, and we've price is trying to make a decision: should it close above or should it close below? Um, okay, so if all of this happened exactly the way it did at a supply zone, then I would have taken this trade. So this would have been the trade. Entry would have been there, stop loss there about 18, 19 pips, and then come down to about 130 pips, right? That's the end of the trade. When it comes there, 267060 is the end of the trade because that's the end of the fib. Now, price can obviously go further down. That's a fib extension, but if I do get in on a trade like this, then I close majority of my position. Let's say 90, 85, 90%, or even 95% of my position is closed at the end of that fib level, right? I've named it 7RR because if you do get in on a trade here, that trade is a 7RR trade, right? You're risking about 18 pips to make about 130 pips. Okay, roughly. That's what it is. Okay, so now we got to wait and see what happens. We had a 5-minute close here, so now we're pulling back to create a top wick or to grab liquidity. This candle is just about to close. It's an M15 candle, so it has a, now the next candle has a range to fill, right? 42 pip range to fill. If this pulled up higher, great, but it won't because it's already reached there. So yeah, I can't do anything. I won't do anything. Because even though price might, there is a high probability of price doing what I said it would. The next candle pulls up, creates a top wick, and then comes and fills this range. This 45, that 50 pip range, there's a 50 pip range to fill, and then goes even lower, probably here. So it's got about 80, 90 pip move left, or even lower, even here, right? So it's got about 120 pip move, potentially between uh, 60 to 120 pip move left, but I can't take that trade because I trade at the extremes. I trade only at the extremes. I don't trade in the middle. I don't take trades in the middle. I trade at the extremes. Okay, the candle's closed. We have a wick now, so we just need to create a bit of a top wick to push down. And that wick is about 50 pips. Yeah, that wick is 50 pips. 50 pip wick to fill, and once it fills, once it breaks this low, we should fall down here to this level. So if it breaks the low, we should fall down to 2665. 2665. That's about 85 pips away now. We are coming up, coming back up. We are coming back up. Should I take a trade here? There's a flat top there. 20 pips. Should I take? It's way too much, but there's a flat top there. Yeah, it might break this high. It might break this high. Might break this high. What is this reacting to? Oh, it's reacting to this demand zone here. Yeah, we're gonna try to break this high and go further up. If we get here, then maybe I'll reconsider taking that trade, anticipating a move down. And if it goes against me, then I'll manage risk, because we do have a 15-minute high there to manage risk. We have another 15-minute high there to manage risk. So I can manage risk there. But if it does go up there, I might take that trade, but price is about 50 pips away. Because we are reacting to this level here. That high is 70.52 and this high is 70.55. So this high was broken by this move here up, not this one. So we're expecting price to come down if it does. So this current candle should break its own top wick, should break its wick, or the next candle should break its wick and continue higher. And then maybe we get an opportunity. Maybe, I don't know. Let's see. I would like to see price come down and take out this area and then push up to come down, but reacting there. Open 82.29, 82.29. 82.07. Yeah. So bearish engulfing, push down, couldn't, try to come back, couldn't come back. There is a supply zone right there, close of that candle 82.07, and then maybe higher up here. Close 326. There, close 402. We should take out this high. Technically, we should take out this high. That supply zone drop, base drop. There's one there. And yeah, 07. Okay. Place one there. 26.98. Place one there. So all very small positions based on that push down. So the entire risk, that 30, 34, 35 pip risk is divided into three. So I don't take my full position down here. There's one here. If price goes deeper, then we'll trigger this supply zone here. If it goes deeper, then it'll trigger that rally base drop as well, which price already came down to. So if it does come back there, then it's going even deeper, probably to that one there. But because it's a M5 zone, yeah. So we said that high is going to be taken out. I just said that the high price is down here, that this high is going to be taken out. So it's very likely now going to take out that high and then come above this high. Once it comes above this high is when I'll start to either be interested in this or concerned about it. But anyway, we just leave our positions taken at this supply zone, taken at that supply zone, and we've taken one in the middle close to this sniper entry, just about 4 pips away from this sniper entry, and about 3 pips above the sniper entry. Okay, so let's see. And if we do get there, we want price to come down here again. It's 114. Yeah, that's fine. That's fine. Yeah, that's absolutely fine. So price has taken out this M15 high, is reacting to this level here. It's reacting here. 4 minutes for the candle to close. It's reacting here. On the M15, we created a wick, pulled up there. This was a news candle. Price dropped straight through here. The news candle couldn't pull up, and now it's trying to do it. So maybe it pulls up now and then comes down. Let's see. It's small risk, right? So yeah, if you do lose, even if I don't manage this trade, if I don't manage risk on this trade, I'll lose less than what I had planned because I've divided my risk into 3 entries here. So I'll lose less than what I had intended to lose just because I've not taken the entire position right here. Okay, so let's see if price gets there in the first place. Price needs to get there to get us into an entry first. Broken this high, so this candle should create a top wick for the next candle to fill and continue up. Yeah, this will be the 1 hour close. So the 1 hour close will very likely close a bearish candle with a big wick, the big bottom wick here. So the idea is for price to pull back up, come down and fill this wick on its way down. That's the assumption. That's the anticipation, right? Price to pull back, get us entry, come down and fill this wick in the next hour, within the next hour. That'll be the trade for the New York session. If I get that trade, then I'm done. If not, then we'll have to wait further down to see if price comes down further to get us a trade somewhere here if it does come further. If it doesn't, then it doesn't. Then it's just reacting off this demand zone and it's just continuing up, right? So it's pretty simple. Either it comes up, we get an entry and we come down to this next resistance area that we drew here, or um, price just reacts to this rally base rally and continues up towards 2700. It's one of those two things. T160, probably keep it at 130. Yeah, that's better. Just a minute for the candle to close. A 30-minute candle is closing with a big wick here, a 100 pip wick. The next candle will break the high here. The next candle is going to break the high. No matter where this candle closes, the next candle should break the high and then either go straight up or go here and then come down. So any one of those two scenarios. One will give us a winning trade, one will give us a losing trade, and that loss, we gotta manage that loss and make that loss as small as possible, as manageable as we can for the next trade. That's the whole point. That's what you're supposed to do every day. Manage the loss so well that the next trade doesn't have to struggle. Okay, we're about to break the high. We should break the high of this candle. Manage the trade so well that the next trade doesn't have to do much to make up for the losing trade. That's the point. That's the purpose of managing risk. You got to manage risk so that the next trade doesn't have to struggle to make back that loss. If you don't do that, every trade, every winning trade that you trade is going to be fighting, is going to be struggling, trying to make back the loss you took on your losing trade, right? We have some minor support there. That's not really important. Um, this is more important than that actually. Here, so right there we have resistance. Price is reacting to it. Price needs to close above this to go higher and come down. If it doesn't, it doesn't. We just go straight down, we don't get a trade. But if it does, then we wait here, and then we get a trade going down. There is resistance there. So if you look on the 30-minute time frame, you can see that resistance. On the H1, you can't because that just happened. The H1 candle just closed. But on 30-minute, you can see that resistance. You can see price struggling there, then closing above, then closing back below, then struggling again here. Now it's struggling again. If you look at the 15-minute time frame, you can see it's clear. If you look at the 5-minute time frame, you can see that it is clear, right? So if you draw them correctly, it'll show at least on 3 different time frames. It'll show correctly on 3 different time frames. Yeah, so we didn't push up. We just tap the high and then it's coming down. Just tap the previous high. We didn't tapped it and now we're pushing down 50, 60 pips. Yeah, 60 pips down and we might just come down. We are just reacting to the resistance. We're not going higher. This, I cannot take this trade here because as I said, the stop loss is too much. I'm never going to take a trade with a 75 pip stop loss or a 76 pip stop loss. 30 pips, 34 pips, 33 pips. Yeah, that's borderline. But anything below 30 is good. So that the stop loss on that one on the last entry is about 15, 16 pips. This is about 23 pips, 22, 23 pips. And this one is about 30, 34 pips. That's fine, but we didn't get there. So it's unlikely that price is gonna come up. I think this is done. We're heading right down now. We're heading straight down. We reacted to that resistance and we're pushing down. Once we close back below here, we're heading to this support level. Yeah, just unfortunate. Price didn't come back up to wick this area. Since price has been at all-time highs since the last couple of months, it's been like this. Price doesn't really come to these areas often because we're at we're at a very uncertain we're at very uncertain times when it comes to gold, right? Gold has never been at these prices, so it's not functioning or trading the way it usually does. Sometimes it does come to these levels, sometimes it doesn't. But I've seen over the last couple of months, it um, it comes a little less to these levels than it usually does. Um, Otherwise, these levels work perfectly. The price taps them to the pip and drops or rallies to the pip. But it over the last couple of months, it's been a little less because price is just pushing up over the last 2 months. Yeah, so we almost fill that wick. We're anticipating this move down to fill this 30-minute candle wick or the H1 candle wick, but we were anticipating price to go up and then come down, but it didn't. It reacted to this resistance level here that is in line with this level of the fib, which is 2678.1, 2678.1. So we reacted there and we dropped 77 pips and we should come down, fill this wick and continue down. So price is not going to go up high now. Okay, I'll be back. I just need a coffee to stay awake. Um, I'll be back in 5 minutes. We've got about 8 minutes for this candle to close. Okay, yeah, so price came exactly to where I said it would. It came to this two double six 2665 level that I had marked. Came right there. That was a massive drop, 155 pip drop, but I was anticipating it to come up here and then drop, but it didn't. Unfortunate. So we close these pending orders. No longer need to have them there. Get rid of all of that. That is done. Um, okay, right. Um, okay, so yeah, we closed below this support level, so we should head further down. Now, I want to see um, how price is going to react when it comes to this wick here. That's this M30 wick, right? This wick is about 28 pips, 29 pips. I want to see how price reacts when it gets into that wick. If it does get into that wick again, it should. It should come down. It should get into that wick, and we might get a bit of a reaction there. Um, yeah, so that's the next area now. So this was one area of interest where we were looking to take a trade. Sorry, it's not an area of interest. I'm sorry. Let me take that back. There was no supply there. The reason we tried to take a trade there is because price had created a liquidity wick up here and was pushing down, and news failed to come up to that level. So we placed trades hoping the price would break. So this was a news candle high, hoping the price would break the high and continue up, get us entry, and then go down. But it didn't. It broke the high. It didn't get to our entry. It fell short of it maybe by about 15 pips, 10 to 15 pips, and then dropped 160 pips. We should continue down to maybe another in total of about 180, 190 pips, 195, even 200 pips. We should come down, right, in total. And so we've got another, right from where current price is, we've got about another, hopefully another 50 pip drop to these levels. Um, yeah, because we've closed below this, so now the next level is somewhere here. So in terms of support resistance, there is, so that's one level. We've got, not there, here. Yeah, so here's the next, that's the next area. Um, we had drawn this exact same thing yesterday as well. Um, that's the next area that we're coming to. So let's see what price does. A high there, 858, 58, 788. Okay, we are gonna take a trade here now. If you come, we're gonna manage risk. It's about 18 pips. Um, okay, that's one. It's a little higher, but that's fine. We'll take one deeper as well. If it does come deeper, we'll take one deeper. Um, 803, 58, 57, 57, 63, 57, 63. Okay. $21. $933. 45. Then if you do come here, modif 873. Okay. So partial positions have already closed on that entry. That was a very small entry, little too small, in fact. Should have taken a bit of a bigger position, but it was. I forgot to change the lot size there. So it was a little too small a position. $82. Yeah, okay. Right. Okay. So if price, if you look at the 15-minute, yeah. So got about a 15, 16 pip stop loss. Um, Price has a lot of bearish volume, so might just break right through. We're gonna pay close attention to that area. If it does, gonna kind of manage this trade. There's really no way to manage this trade because the stop loss is very tight. Um, yeah, so positions have closed on both 20%. I mean, 25, 25% have closed on both those positions. So now I'll lose less than what I intended to lose. So that's fine. But in terms of managing risk, we've got a 15-minute candle low here. This low is 59.53. Sorry, 59, 59.53. It's very tight. The stop loss is it's about a 15 pip stop loss. Yeah, 16, 17 pip stop loss. So it's quite tight as it is, but I'll try to manage it even in a tight stop loss. I like to manage risk because I just feel good when I manage risk. Even if I save 0.1% or 0.2%, I get pretty excited by that. Um, so where could we go? So we've got on the M15 we've got clean space to the left. On the M5 we've got a wick here that can cause us a bit of trouble. Go up there and come back down. That's about 75 pips away. And then yeah, on the M1 I don't need to worry about the M1, but in terms of the 50-minute candle is just about to close. No, sorry, 5 minutes for the 5.5 minutes for the 50-minute candle close. Um, should break this high, maybe go back to this resistance, right? Maybe back there, 97 pips. So yeah, this 2670. Okay, 2670. That is 97 pips. That's one TP. So the 50-minute candle closed like this. Great. And the next one maybe here. 2677. 2677. Okay. Yeah, that is 172 pips away. So, okay. We should come further down. Looks like we're coming further down. Yeah, we might come further down. Unless this 15-minute closes a bullish candle, the next candle is coming further down. This needs to close a bullish candle above this resistance area now. If it closes above 26665, then maybe the next candle will respect this low and continue higher. But it needs to close above it. Um, so we're about 55 pips on both positions, running on both positions, 55 pips each. Oops, so a stop loss came to break even. That's a problem. I'm gonna leave the stop loss at 125. Cancel that stop loss. Cancel that stop loss. And I put the stop loss to where it was. Yeah, because it's very tight. It's a very tight. It's a 15, 16 pip stop loss that we've taken. So it's a very tight stop loss. I don't want stop loss to come to break even. I'll manage it if we come down here. If you break this low, then maybe I'll manage one of the positions. But I've already closed partial positions on. It's automatically closed. I've not closed it. My trade manager has automatically closed partial positions. So now I just want to see where this 50-minute candle will close. If it closes like this, then the next one should break the high and continue higher. So we got one TP there and one TP up here. One TP is right at this resistance area. Right, so we get out of that. If you get there, that's about 100 pips. Right, it's 97, 98 pips. If you get out there, that's about 97, 98 pips, which is great. Then, so that's on a 16 pip trade. On a stop loss, you've taken about 98 pips, 97.5, 98 pips on that trade. And the next one is at 175 pips, the next position. Right? Let's see if you get there. Sorry, just one second. Yeah, so in terms of so this is the NYSE. NYSE is just about to open. NYSE is opening now, right now. This is the open of the NYSE. This is the NYSE open, right? So NYSE just opened. This was the New York move. That was the pre-NY. So just to understand, to explain to you what has happened so far. So if you go back to the stream, we explained where the Asian, I explained where the Asian low was, where the Asian high was, then what the London low was, and what the London high was, right? I explained that. So I think in the Asian session, price moved about 60 pips, which is nothing, didn't do much. And then in the London session, we moved about 125 pips, and I showed where the low of the session and the high of the session is. Then we had between London and pre-NY, we had price coming up and price set up in pre-NY, pre-New York, it's set up for a move down in the New York at the New York Open. So this was the New York Open candle, and price moved down in total of about 230, 232, 235 pips, right? It moved down about, yeah, from here, about almost 250, right? 247 pips, right? From right the top there. But let's take at the open of the candle always. The open of the candle is about 235 pips, 233 pips, right? So then we move down. Now the New York Open is done. So that's the first hour and a half. Now we have the NYSE open. So this price came down to our area of interest. We had a very tight stop loss, 15, 16 pip stop loss, and we took in a trade. Price is now running at about 75 pips in profit. We want price to get up here. That's about 100 pips, the first TP, and then the second one is about 175 pips, right? So this is, I'm hoping that the NYSE volume will pull back a little bit, create a bottom wick, and then continue up, because price as the M15 candle has clearly rejected that area, creating a liquidity wick from the zone. That's what's important. Not anywhere, not in the middle of nothing. This liquidity wick is in the middle of nothing. This liquidity wick is from the zone. So it's not about which one works or not to me. It's about how they are important to my decision making, uh, of my trade plan, right? Now this wick here, this liquidity grab here, uh, though it might be important to someone else, it's not important to me because it's not a part of my trade plan, right? It's not about which one will work and which one is better and which one is not. That's not the point. The point is that which which candle is suits which candle fits into your trade plan. This is the candle that fits into my trade plan, right? Came down exactly. I'd marked this before the session opened. When we did our analysis, I had marked this, and price came there and touched. I said price comes and touches it, should take a trade, and we got in a trade. You can see exactly at 2659.8 is my entry. 2659.8, and there's one about a pip above that, about 2 pips, on a pip and a half above that. Okay, so that's fine. So it came there, and now this candle has closed above this resistance level. First it closed below, now it's come back and closed above it, above this 2665. What I want to see is price create a bottom wick, or come this candle closes back kind of below, and the next one goes above and closes back again above, and we continue high, right? That's what I want to see, because we went up and we closed the candle with no top wick. No top wick means price can now push down, right? So I want this low to be respected. Since this is a liquidity wick, since we grab liquidity, I want price now to respect this low. If price comes down and my entry is exactly at the bottom of that wick. If it comes back and breaks the low of that wick, then uh, there is maybe no reason to hold this trade, because then we've just about 10 pips away, 10, 12 pips away from our stop loss, and price could fall down and go and hit our stop, right? So then there's no reason for me to hold these trades. I'm going to close all the pending orders, and I'm going to close the open trades. The point is, this wick now should be respected, because this wick came exactly to the area that I was anticipating. So that wick, if you look at that wick, that the low of that wick is 59.54, and we go down to the 5-minute time frame, you'll see where that wick came. It came to this demand zone, drop base rally. If you go down to the 1-minute time frame, it's even clearer. Okay, we're almost here at our TP, first TP, which is about 97, 98 pips. Sorry, I just yeah. So this was a drop. I put this line before the session started, when I was doing the analysis, right? So before the session started, we I put this drop, base in candle. That's a base. That's a base. That's a base. That's a base. That's a base, and then that's the leg out. So leg in, 1, 2, 3, 4, 5 base in candles, and leg out, and I'd put it at the open price of the candle, because that's the highest point of the base in that range. So if we put the green line there, 2659.33, and that's exactly where we it didn't come, sorry, it came right here, sorry, this one, this is the one, this is the demand zone, that it came to, this drop base rally here, right? So it didn't come down, there is an order right there as well, but it didn't come down to that. It came to this demand zone, drop base rally, this big move. It came right there, 26598 or 265,982, 2659.8. It came there and it reacted to it, and we're trying to close above this support now. We're trying. Price is struggling right here. Yeah, it's struggling right now. Yeah, we came very close, but we couldn't reach this resistance. This candle has no wick at the bottom, so price should come lower down, and then probably try going up there again. But if you come down and if you break this low, I'm going to close the trade. Yeah. So we tapped into that low. Okay. We tapped into that low. Now price may come further down. Price may come further down to grab liquidity, if it is to go up. If not, then we're coming straight down and we're going to break this low. Once you break this low, I'm going to close this trade. I'm not going to keep this trade open. Yeah. I'm going to bring the stop loss of this first entry, below this. This low is 59.54. Low 59.53. Low 59.54. Yeah. So 59.54. Two four, 3 pips below. Okay, so it's 3 pips below that low. That's the stop loss. So once that low breaks, then we will get stopped out, right? So I lose just about 10 pips on that trade. I'll just even bring it a little bit high, maybe 3, 4. Okay, that's better. Yeah, 9 pip loss on that trade, right? So if price comes down, breaks is low, I get stopped out, It's very close to the entry. It's about 9 pips from the entry. And that's very likely what's going to happen now. Price is coming down again. So we struggled at this. We couldn't reach here. We came very close but couldn't reach here, and price is coming down again. Yeah, it's just about 10 pips away from the stop loss. Yeah, I'm gonna get ready to close these trades. It's very likely that I take a loss on this trade, right? Very likely, because price can just quickly push down very fast, can kind of spike down, and that's very possible. And I take a small, but the loss will be much smaller than what I had planned to lose today. Much smaller. The 4-hour candle. So we have about 19 minutes of the 4-hour candle. The 4-hour candle is pushing down. And if it pushes down like this, then we should push right through this area and come down here. Yeah, we're coming down. Gonna get stopped out. Just 5 pips away. I'm gonna let the stop loss get hit. I'm not gonna try to do anything because I got a very tight stop loss. 3, 4. 2, 4. Right. Yeah. Yeah, the stop loss is just about from for the second entry, it's about 5 pips from the entry, and the first entry it is 9 pips from the entry, right? So the whole point is this M15 low must be respected for this trade, for this to be a winning trade. This M15 low, once this M15 low breaks, then there is no reason to hold these entries because price is coming further down, right? So if this M15 low is broken, that's it. The stop loss is right under there, and I get stopped out. I'm not going to have these huge stop losses suddenly switch. A lot of retail traders do that. They set their stop loss on maybe the M15 or M30, whatever their entry time frame is, and soon as price starts coming close to their stop loss, they switch to the H1, then the H4, then the daily, and start increasing their stop loss. I don't do that. In fact, I do the opposite. I start pushing my stop loss tighter and tighter towards um, um, a logical area, not just anywhere, but a logical area. So the logic behind this stop loss is that this is a liquidity wick from this high liquidity zone that we had marked, right? We had we had put down here high liquidity zone right here, right? These two are high liquidity zones, and price came there, and now price must respect that wick. It must respect the low of the wick. If it breaks it, the trade is done. We're struggling at that same resistance. We're struggling to close above it. So we had a 15-minute close above it with no top wick. So price, when there's no top wick, then price generally goes in the opposite direction, and that's exactly what it did. It dropped, um, what, almost 100 pips. It dropped down, right? Now again, it's struggling and it's coming down. We went up to reject that area, and we're pushing down. Yeah, we should come down now. 15-minute. This candle is closing in 30 seconds. So this candle closed above. This candle will close below this resistance, and the next candle should wick up and then continue down. But I'm going to keep the stop loss, even though I know that that's very likely, that's very possible. There's a high possibility, very likely that will happen. A high possibility that that will happen. Just what I said, that this candle is going to close below this support right now. It's going to close here. The next candle is going to wick up and then continue down. Even though I know it's going to happen, I'm going to leave the stop loss as it is, because it's just under the candle, right under there, right? I'm going to leave it as it is. It's going to wick up and continue down. I'm not going to manage this trade anymore. I managed it enough. I managed it enough. Brought the stop loss here very tight. Yeah, we wicked up and now we're coming down. Just as expected. We're coming down and we should go down and then break this low. So this is the low of the previous M15 candle, which is now there. So that low is 60.05. So now we got another M15 low to manage trade. Yeah. So once we break this low, that low is going to get broken. Okay. So if price is to continue up, it shouldn't break this low. If it breaks this low, then this trade is going to get stopped out, because price is going to break the low that is just 4 pips away from that low, right? These two lows are very close to each other. So price must respect this low to continue higher. Yeah, we're coming down. We're rejecting that resistance. Price is unable to close above it. We're coming down. I'm going to close, as soon as we hit that, I'm going to close the first position. 2660, 2660. That's the stop loss. So if I get out there, that'll be just, if I can get out right there, that'll be just a 2 pip stop loss. Should lose 2 pips on that first trade. Unless price spikes right through, as makes a very quick move down, and that can happen. That's very likely, because this area is a high liquidity zone, and in high liquidity zones, stuff like that does happen. Okay, we're there, just there. Let it break the low. Low to 60, or yeah, just about there. Yeah. Okay, I closed it. Yeah. So I lost almost nothing on that trade. It's a break-even trade. I don't think I lost even a pip on it. The next one comes to the next red line. I closed that as well. Right, so right. should break the low. It should break. Yeah, it's coming down. That was my third pending order that got triggered. Third buy limit order. Okay, closed. So it's break even. It didn't break the low, but I closed it because price came too close to it. Okay, so it was just a break even day, and we should continue down now. So it's just a break even day. Because this is the 4-hour candle close, and we might have a bit of a pullback right now. Yeah, just kind of pushing up. Yeah, we broke. We're continuing down now. So yeah, it's going down. There you go. That's a spike down, straight down. We manage risk beautifully. It's beautiful. There, straight down. We're going straight down. Just manage risk beautifully. I thought I would be break even, but yeah, it was almost. I thought it would be a loss, but it wasn't. It was a break even day. Okay, so that's it. Yeah, so waited for opportunity here, couldn't get it. Took one here. Price came about 95 pips from entry, but couldn't reach a TP, first TP, and fell right through. So that's fine. That happens. Now this is the 4-hour candle close, and the 4-hour candle is going to close a very strong bearish candle, and price should then the next candle in the first hour or so should pull back up a little bit, and then continue down. Yeah, so I think that'll be the end of the stream as well. So there was two opportunities. One up here, fib was drawn. You can go back and see what that opportunity was. It was a beautiful trade, but unfortunately I didn't get entry because I was waiting for a tighter trade. This was really beautiful. This trade was beautiful, but it didn't get to this resistance level. It didn't have the strength to get to that resistance level. It came up about 96 pips. My TP was about 98, just missed short, fell short by a couple of pips, and then dropped straight through. So now we've come down here. This is the M15 candle, grabbing liquidity. Let's see if this creates a liquidity wick. But even if it does create a liquidity wick, I'll be a bit weary of, I'll be kind of, I might not take this. Let's get rid of that. We don't need this anymore. Okay. So price came down here. Came down to that candle. Okay, interesting. Came down to this candle. Oh man, it is pushing up. Came down to that candle. Okay. I'm going to pay attention to this candle and see how much is that. 46 bucks, too much. Price has to come down lower. To give this trade a second chance, it has to come down lower. So that candle, 441,983. 441,983. So if it comes down to this candle, I'm going to give this idea the buy is a second second chance, right? I'm going to give these buys a second chance. We should break this low. Mm, nah, it maybe might not. It's made a 3 minutes of the candle close. Made a liquidity grab from that zone. May not need to come into this candle. May not need to. Yeah, it's pushing up now. Right at that support. Perfect. Right at that support that we had drawn. We had the same level drawn yesterday as well. And price touched it, rejected. It came to this M30 area, this H4 zone, this H1 level here. Mm. If it does decide to come a little deeper, I'll take a trade because this much of a stop loss is too much. 46 pips. Yeah, it's a little too much. It needs to come a little deeper. It's gone up about 75 pips already. Yeah, 75 pips already. A couple of minutes more. We'll wait for the 4-hour candle to close. We are rejecting this area on the 4-hour. We are rejecting it. It's not as. Let's see how the 4-hour candle closes. If the 4-hour candle closes above that resistance, then VR price is rejecting that area, and the next candle will need to. The next candle might just trade above that. If it doesn't make a low wick, if it doesn't break this low, then there's no chance of getting an entry because the stop loss is too wide. I'm not going to take a stop loss with a 80 pip stop loss. No way. Price will need to come low to get an entry. So it is still at that high liquidity zone. It's reacting to that high liquidity zone. And this 30-minute candle. This 30-minute candle here. This wick. Close 53.77. Okay, so the candle is just closing now, the 4-hour candle. It's closing, yeah, it is rejecting that area, closed above the support. So now my price may not come down to get a second chance to go up, but we closed above. So it could just continue high. It could make a bit of a small bottom wick and then continue higher. And if it does, then I can't get in on those buys because the stop loss would be too much. But we closed above the support because that support is visible on all these time frames. On the 4-hour, on the 1-hour, and on the M30, and the M15, and even on the M5. Yeah, so shame didn't come lower. This was yesterday's, it came close to that candle. This was the NY candle yesterday that grabbed liquidity to 2650 and pushed up. Now we're running up now. There's no opportunity for it to 99, 100 pips. Yeah, moved 100 pips. Yeah, yeah, close. We're gonna continue higher. There's no chance. Okay, that's about it. Similar to exactly what happened here. Price didn't come up here to give us entry, and price is not coming down here to give us a entry to go up. Um, okay, that's the end of the stream. This was price should continue higher now. Should continue higher. Should go up all the way. Maybe here first has to close above here to reach this. Has to close above this resistance to reach that. Okay. So that's the end. That's the end of my time as well. That's about 2.5 hours since the NY open. 2 hours since the NY open, but the stream has been running for about almost 2.5 hours. All right. Um, if I'll place pending orders here and see if later on in the next couple of hours, if price does come down to go up, then I'll place some pending orders here for later today for the next 2 hours. But I don't think in the next 30 minutes or an hour, I don't think price is going to drop now another 125 pips. It might take a while price to come down before it decides to go up again. Or it might just, if it closes above this, then we are heading up. Um, yeah, yeah. If M5 candles begin to close above here, or M15 candles now, M15 now we are, yeah, now we are about 2 hours after NY open, so volume is kind of thinning out. So if M15 candles now start to close above this, then price is going to continue to the next resistance, and then M15 candle close above that, then it's going to continue to the next resistance, right? We've already pushed up 100 pips, so I'm not sure if it's going to come down another 125 pips or 130 pips. Okay. All right. So the point is, the reason for these setups is as much as I would like to take a, a winning trade on these streams, that's not that important to me. It's not important to me. I I just want to show you guys how to draw these zones, how to draw supply demand, how to mark high liquidity zones, and how to draw support and resistance levels correctly, right? So supply demand zones correctly, high liquidity zones to trade from, and support resistance levels correctly. That's the purpose of the stream. So show that, and then how you manage risk when you're getting on a trade, and when price goes against you, and when price goes in drawdown or coming close back to your entry, how do you manage risk? These are the 4 things, right? Supply demand zones, how to draw them, how to draw supply demand zones correctly, how to identify, not draw, how to identify high liquidity zones, and number 3, how to draw support resistance levels correctly, and then number 4, how to manage risk when you're in a trade. These are the 4 things, right? That's the purpose of the streams. That's the only purpose of these streams, is to drill these 4 points down, right? Um, in that process, if I do get a trade, and then the trade obviously be, if I follow those 4 steps, the trade will automatically be a low risk, high reward, high probability trade automatically, right? If I do get a low risk, high reward, high probability trade, great. If I don't, so be it. But the point is to drive those 4 points, right? That's what I want to do with these streams. So okay, that's the end of session. This is the 4-hour candle open. We're probably going to range for about um, 30 minutes, 45 minutes, because this is the current low of the 4-hour candle. This low is going to get broken. Price has to go a little bit more deeper to grab liquidity if it is to go higher. So that'll take time. That might take 30, 45 minutes, even an hour. So probably about 30 minutes, maybe 30, 45 minutes. Up to about 30 to 45 minutes it'll take for this low to be broken, price to come deeper if it is to go higher. So I'm not going to be here for the next 45 minutes. I'm going to end this session now. I hope this was useful. I hope I was able to share some value. I will drive these 4 points that I mentioned every day because that's the purpose. When I come in, when I do the analysis, that's what I'm focusing on. These 4 points, to drive these 4 points home, right? Okay, enough talking for today. See you guys tomorrow.